Time to connect with David Lennox. He's a resource analyst at Fat Profits. Thanks so much for taking time out. And just wanted to talk a little bit about this move that we're seeing in crude oil prices. What's your outlook on what OPEC Plus may do?
Well, look, certainly if you have a look at what OPEC have been doing, they've no doubt been keeping their end of the bargain when it's coming to keeping those production cuts in place. And really, that's what's keeping the oil price under some tension. However, we do think over the longer term, there is still enough doubt in the market's minds to suspect that there could be some destruction of demand still if economic growth does in some way start to fall again or inflation raises its head. So from that perspective, OPEC are keeping enough tension in the oil price not to see it going up to $100 a barrel. They're just keeping it in enough tension to keep it around that $90 to $85 region. That's keeping the US oil producers out of the market, and it's keeping OPEC as the kingpin when it comes to price making. So our forecast going forward, we're not expecting to see the oil price move anywhere towards $100 short soon. We do think that it's going to stay within the range of $85 to $90.
Okay, fair enough. And what do you believe in terms of the news price, the triggers rather, is going to be the most critical to watch out for in terms of the kind of economic support measures that have been announced by Beijing, the manufacturing activity as well in China?
Well, look, certainly we've been well aware that China are in fact moving towards and implementing strategic stimulative programs. They have been doing that for some time. They've got a target that they wanted to achieve in their GDP growth, and we're certainly well aware that that's what they're probably going to hit come the end of the year. So that would suggest to us that, yes, there will be further demand coming out of China for gasoline, and that's going to keep demand in tension. However, we are well aware that OPEC have got an agenda not to let the oil price run too high, because they don't want to have the US producers coming back on stream, especially those shale producers. It does take the pricing court away from them. And we do believe that they're just keeping enough pressure on the pricing of supply to keep those oil prices in the range that we've suggested.
Thanks so much then, David, for sharing with us your thoughts as well as outlook on where crude oil prices could be headed as well as the key triggers.